to all who have joined us by WebEx for standing by. Welcome to the open meeting of the Public Company Accounting Oversight Board. During the meeting, you'll be in listen-only mode. As a reminder, this meeting is being recorded and a recording is expected to be made available on the PCAOB's website. I would now like to turn to Chair Williams to formally convene the meeting.
Good morning and welcome everyone, or good afternoon. This is an open meeting of the Public Company Accounting Oversight Board on September 28, 2023. We welcome those of you who have joined us today by webcast or dialing into the teleconference. Before we proceed with the agenda, I will note for the record that all board members are participating in this meeting and we were able to hear one another. The only order of business before the board today is a staff recommendation that the board adopt a new standard to strengthen and modernize the requirements for the auditor's use of confirmation. To present the staff's recommendation, I will now turn to our Chief Auditor and Director of Professional Standards, Barb Banich.
Good afternoon, Chair Williams and board members, Disparte, Ho, Stein, and Thompson. The Office of the Chief Auditor is pleased to recommend that the board adopt a new auditing standard on the auditor's use of confirmation and conforming amendments to certain other PCAOB standards. This new standard will replace AS 2310, the confirmation process, in its entirety with the new standard, AS 2310, the auditor's use of confirmation. This is an important standard for audit quality and investor protection, as the audit confirmation process touches nearly every audit. Information obtained by the auditor directly from knowledgeable external sources is an important source of evidence obtained as part of an audit of a company's financial statements. Confirmation has long been used by auditors to obtain such evidence. The new standard and related amendments are intended to enhance the PCAOB's requirements on the use of confirmation by describing principles-based requirements that apply to all methods of confirmation, including paper-based and electronic means of communications. In addition, the new standard is more expressly integrated with the PCAOB's risk assessment standards by incorporating certain risk-based considerations and emphasizing the auditor's responsibility for obtaining relevant and reliable audit evidence through the confirmation process. The new standard updates existing standards to reflect developments in practice, such as the use of electronic forms of communication between the auditor and the confirming party, and audit techniques that enable the auditor to obtain relevant and reliable audit evidence by directly accessing information maintained by a knowledgeable external source. Lastly, the new standard strengthens PCAOB requirements in certain areas to focus on the need to obtain reliable audit evidence when executing the confirmation process. I would like to acknowledge the many people within the PCAOB who provided significant contributions to this project. I would like to express my sincere appreciation to the team that led this project: Dima Andrienko, Lisa Busidou, David Hardison, Heather Jossam, and Danny Verbeck from the Office of the Chief Auditor, Martin Schmalz, Michael Gerbett, Tian Liang, Tasneem Rehan, and John Cook in the Office of the Economic and Risk Analysis, and Connor Rasso, Annie Yan, and Keisha Patrick in the Office of General Counsel. I would also like to recognize support provided by the staff from the Division of Registration and Inspections, the Division of Enforcement and Investigation, and the Office of Communications and Engagement. Finally, I would like to thank the Security and Exchange Commission staff, including the staff of the Office of the Chief Accountant, for their support and assistance with this project. Lisa Busidou and Heather Johnson of the Office of the Chief Auditor will now provide an overview of the new standard. Then Martin Schmalz and Tasneem Rehan of the Office of Economic and Risk Analysis will provide some additional remarks, followed by our recommendation. Lisa?
Thank you, Barb. Good afternoon, Chair Williams and board members. I'm going to cover several aspects of the new standard before you today. First, the integration of the requirements for the auditor's use of confirmation. with the requirements of the PCAOB's risk assessment standards. And second, the situations in which the auditor should use or consider using confirmation in the audit. The existing standard on the confirmation process predates the PCAOB's standards on risk assessment, which were issued in 2010. This new standard addresses how the auditor's use of confirmation works in concert with the risk assessment standards. The PCAOB's risk assessment standards acknowledge that evidence obtained from a knowledgeable source outside the company generally is more reliable than evidence obtained only from internal company sources. When properly designed and executed, the confirmation process can be an effective way of obtaining relevant and reliable external audit evidence, including in situations where the auditor identifies an elevated risk of material misstatement due to error or fraud. The new standard also addresses specific considerations relating to the confirmation of cash, accounts receivable, and the terms of certain transactions. We believe that confirmation procedures generally would provide relevant and reliable audit evidence for cash and accounts receivable. With respect to cash, existing AS 2310 does not separately address the auditor's responsibilities for confirming cash. With respect to accounts receivable, existing AS 2310 includes a rebuttable presumption that the auditor will perform confirmation procedures. Under the new standard, when auditing a company's cash held by a third party, which includes cash equivalents, and a company's accounts receivable, the auditor should perform confirmation procedures or otherwise obtain relevant and reliable audit evidence by directly accessing information maintained by a knowledgeable external source when the auditor determines that those accounts are significant accounts. A knowledgeable external source, as referred to in the new standard, generally is a third party who the auditor believes has knowledge of the information that may be used as audit evidence. A number of commenters on the 2022 proposal noted that rather than sending a confirmation, auditors could obtain direct access view of bank information or would be able to do so in the future, and that such access could provide an effective means of directly accessing information maintained by a knowledgeable external source. And that such audit evidence could be at least as persuasive as audit evidence obtained through confirmation procedures. And the new standard allows the auditor to perform such a procedure. Under the new standard, an auditor need not necessarily confirm all cash and all cash equivalents or all accounts receivable. An auditor would select individual items to confirm following the relevant direction in PCAOB standards, including identifying and assessing the risk of misstatement and developing an audit response. The new standard emphasizes that in selecting the individual items of cash to confirm, the auditor should take into account the auditor's understanding of the company's cash management and treasury function, and for both cash and accounts receivable, take into account the substance of the company's arrangements and transactions with third parties. Confirmation of accounts receivable is a long-standing audit procedure typically used by auditors during the course of an audit. As I mentioned, the new standard carries forward the presumption to confirm accounts receivable in existing AS 2310, but more clearly addresses situations when it is not feasible for the auditor to obtain relevant and reliable audit evidence directly from a knowledgeable external source. Under the new standard, if the auditor determines that it would not be feasible, based on the auditor's experience and other factors, the auditor should obtain external information indirectly by performing other substantive procedures, including tests of details. The new standard provides examples of external information obtained indirectly. The new standard also includes a requirement for the auditor to communicate with the audit committee when the auditor did not perform confirmation procedures or otherwise obtain audit evidence by directly accessing information maintained by a knowledgeable external source for significant risks of material misstatement associated with either cash or accounts receivable. We believe that this new communication requirement will serve to enhance the audit committee's understanding of the auditor's strategy for addressing significant risks identified in these accounts. The new standard also provides that the auditor should consider sending confirmation requests in certain additional situations, such as about other financial relationships with the company when confirming cash. In addition, when the auditor has identified a significant risk of material misstatement associated with either a complex transaction or a significant unusual transaction, the auditor should consider confirming those terms of the transaction that are associated with the significant risk of material misstatement, including a fraud risk. Now, I'd like to hand over to Heather Jossam, who will discuss some additional aspects of the standard.
Thank you, Lisa. Good afternoon, Chair Williams and board members. I will now discuss two additional aspects of the new standard. First, the auditor's responsibility to maintain control over the confirmation process. And second, situations in which other procedures should be performed by the auditor as an alternative to confirmation for selected items. The new standard includes a provision consistent with the 2022 proposal that the auditor should maintain control over the confirmation process to minimize the likelihood that information exchanged between the auditor and the confirming party is intercepted or altered. In consideration of comments received on the 2022 proposal, the new standard, along with a corresponding amendment to AS 2605, consideration of the internal audit function, clarifies that the auditor should select the items to be confirmed, send confirmation requests, and receive confirmation responses. In addition, the new standard requires that the auditor perform certain procedures when an intermediary is used to facilitate direct electronic transmission of confirmation requests and responses. Under the new standard, the auditor should evaluate the implications of using an intermediary on the reliability of confirmation requests and responses. The new standard specifies certain procedures to be performed as part of the evaluation. The new standard also clarifies that when the auditor determines the risk of interception and alteration of confirmation requests and responses that the intermediary is not addressed, the auditor should not use an intermediary to send confirmation requests or confirmation responses. Next, I'll discuss situations when the auditor performs other procedures as an alternative to confirmation procedures for selected items, also referred to as alternative procedures. Under the new standard, alternative procedures are substantive audit procedures that an auditor performs when they are unable to obtain relevant and reliable audit evidence about one or more items selected for confirmation. The new standard addresses certain situations involving confirmation where an auditor should perform alternative procedures for selected items. The first such situation is when the auditor is unable to identify a confirming party who would provide relevant and reliable audit evidence in response to a confirmation request. The second is when the auditor is unable to determine if a confirmation response is reliable. And the third is in the case of a non-response or an incomplete response. In addition, the new standard provides that the auditor should perform alternative procedures when the auditor is not able to use an intermediary, yet would be unable to send confirmation requests for selected items without the use of an intermediary. The new standard includes examples of alternative procedures that may provide relevant and reliable audit evidence for selected items of cash, accounts receivable, accounts payable, and for terms of a transaction or agreement. Additionally, to remind auditors that the auditor's assessment of risks of material misstatement, including fraud risks, should continue throughout the audit, including the confirmation process, the new standard states that when the auditor is unable to obtain relevant and reliable audit evidence about the selected item through confirmation, the auditor should evaluate the implications for the auditor's assessment of the relevant risks of material misstatement. Lastly, the rulemaking includes amendments to several of the board's auditing standards to conform to the requirements of the new standard. That concludes my remarks. Thank you for your time and attention. I will now turn the floor over to Dr. Martin Schmaltz, the PCAOB's Chief Economist and Director of the Office of Economic Research and Analysis, to provide some additional remarks followed by our recommendation. After that, we would be happy to respond to any questions you may have.
Thank you, Heather. Thank you, Heather. Good afternoon, Chair Williams and board members. The Office of Economic and Risk Analysis has performed an economic analysis of the amendments to the board's auditing standards that the board is considering today. As always, the economic analysis includes establishing a baseline of firm performance under today's rules, identifying a need for rulemaking, evaluating the economic impacts of the amendments, and assessing reasonable alternatives. We appreciate the input of commenters on the release for this standard and have carefully considered the information provided to us through the notice and comment process in developing the economic analysis for this adopting release. We believe the economic analysis contained in this release faithfully and even-handedly sets out the likely economic effects of the standard. I will now turn it over to our lead economist on this rulemaking, Tasneem Raihan, to present the details of our analysis.
Thank you, Martin. Good afternoon, Chair Williams and board members. Our economic analysis is grounded in a thorough examination of academic research and a comprehensive review of audit firm methodologies. As noted earlier, auditors extensively use confirmations as part of financial statement audits. However, academic studies, as well as results from inspections and enforcement activities, indicate that audit performance, as it relates to confirmations, may be falling short in certain areas. Also, our current standard may not adequately address certain developments in practice, including the use of electronic communications and the involvement of third-party intermediaries. While some firms, particularly larger ones, have already incorporated into their audit methodologies more robust procedures than our current standards require, others generally follow our current standard. The enhancements to our standard that my OCA colleagues outlined today would improve a firm's performance by promoting a focus on obtaining reliable audit evidence from the confirmation process. By strengthening and modernizing the requirements for the auditor regarding the design and execution of the confirmation process, the new standard helps mitigate the risk of low-quality audits caused by the lack of observability of audit quality and the influence of the auditor-client relationship between the auditor and the company. The new standard would more clearly apply to developments in practice, including electronic communications, and address the use of third-party intermediaries in the confirmation process. Generally, we anticipate that the benefits of the new standard would be relatively modest, particularly given that some firms have already incorporated into practice some of the new requirements. In terms of benefits, we believe that investors would benefit from these enhancements as they would lead to a more robust audit confirmation process. An audit confirmation process designed and executed under the new standard would reduce the likelihood that the financial statements are materially misstated, whether due to error or fraud. Notably, academic research has demonstrated that in certain instances of financial reporting fraud, the auditor's assessment of the reliability of confirmation responses or auditors performing additional procedures to ensure reliable audit evidence could have facilitated earlier detection of the company's misconduct. Early detection of accounting fraud is an important aspect of investor protection because there is academic evidence that such fraud can cause significant harm to investors in the companies engaged in fraud, as well as indirect harm to investors in other companies. The new standard should also benefit auditors by providing enhanced clarity and thus reduce regulatory uncertainty and associated compliance costs. It will also promote consistency in practice with respect to the confirmation of cash and accounts receivable. In terms of costs, firms would incur fixed costs to implement the standard, including updating methodologies and training personnel, as well as variable engagement level costs to perform confirmation procedures in line with the enhanced requirements, again, to the extent that they are not doing so today. We anticipate the costs associated with the new standard to be relatively modest and that they would be justified by the anticipated benefits the new requirements will bring. In closing, I would like to thank our colleagues in the Office of the Chief Auditor and the Office of the General Counsel at the PCAOB and our friends at the SEC for the collaboration in the development of our economic analysis. With that, I'd like to hand it back to Barb to present the staff's recommendation. Thank you.
In closing, the staff recommends that the board adopt the new standard on the auditor's use of confirmation and related amendments to board standards substantially in the form provided to you. We also recommend that the board instruct the staff to submit the new standard and related amendments to board standards to the Securities and Exchange Commissions for approval pursuant to Section 107 of the Sarbanes-Oxley Act, and that the board request that the SEC approve the application of the standards to emerging growth companies. That concludes our prepared remarks, and we're certainly happy to answer any questions. Thank you.
Thank you, Barb, Lisa, Heather, Martin, and Tasneem. At this time, my fellow board members and I will have an opportunity to make a statement or ask questions to the staff. We will proceed in the order of seniority, and I will begin. A little over 9 months ago, this board convened to issue a proposal on revising our confirmation standard, AS 2310, the confirmation process. The process that involves the auditor verifying information about one or more financial statement assertions with a third party. Despite the fact that the confirmation process touches nearly every audit and provides a critical tool for detecting fraud, this standard has not been substantially updated since it was adopted by the board in 2003. In fact, it has not been substantially updated since it was originally written and put in place by the profession over 30 years ago in 1991. In many ways, revising the confirmation standard is indicative of the broader task ahead of us as we work to modernize our standards to make sure they are effective at protecting investors in today's world. So it is fitting that this is the first standard setting project where this board issued a proposal and followed up with a new standard. The standard setting projects on our agenda address more than half of the standards in one way or another. Most of these standards being considered, like confirmations, are so-called interim standards, which the PCAOB first adopted in 2003 based on standards set by the profession on what was intended to be a temporary basis. Yet they have not been significantly updated in at least 20 years. Our capital markets don't stand still. They evolve constantly. Practices change, technology advances relentlessly, and new risks emerge. To keep investors protected, our standards must keep up. And that is why we are here today. When the confirmation standard was developed in the early 90s, the auditing profession was dominated by the exchange of paper documents. Confirmation requests were typically mailed to the confirming party, and requests were mailed back. At times, auditors would receive confirmation responses via a fax machine, which is why the existing standard references the use of facsimile responses. Today, business is largely conducted online. We are meeting today on WebEx. We walk around with sophisticated computers in our pockets and the ability to share information anytime, anywhere with one tap. It no longer makes sense for auditors to drop a confirmation request in the mail and assume the information in question is accurate if they hear nothing back. That's why the standard before us focuses on positive confirmation, meaning an auditor must hear back from the third party about the information they are trying to confirm. And if they are unable to obtain a response, they should perform alternative procedures to obtain relevant and reliable evidence for the information in question. It does not make sense that accounts receivable should require confirmation, but cash held by third parties would not, nor does it adequately protect investors. That's why the standard before us not only carries forward the existing requirement regarding confirming accounts receivable, it also includes a new requirement for confirming cash and cash equivalents held by third parties. In these circumstances, the standard creates a presumption of performing confirmation procedures or otherwise obtaining relevant and reliable audit evidence by directly accessing information maintained by a knowledgeable external source. The standard takes a principles-based approach that provides for inevitable changes in technology and continued innovation by auditors in the way they obtain evidence, keeping investors protected by ensuring the standard remains relevant as auditing evolves. The public comments we receive provide valuable insight, which is reflected in today's adopting release. We incorporated insight from commenters about the way the standards could better reflect the realities of how the confirmations process plays out in the real world. We incorporated ideas from investors about ways to strengthen communication with audit committees. And we strengthened the standard by providing additional clarity based on feedback from all stakeholders. Thank you to everyone who shared your views. With your input, this new standard will help auditors detect fraud and better protect investors now and into the future. I would like to thank the many staff at the PCAOB for their work on this project. Specifically, I would like to thank in the Office of the Chief Auditor, Barb Vantage, Dima Adrianenko, Lisa Busidu, David Hardison, Danny Verbeck, and Heather Jocelyn. In the Office of Economic Risk and Analysis, Martin Schmalz, Mike Gerbit, Tian Liang, Tasneem Rehan, and John Cook. And in the Office of General Counsel, Annie Yan, Keisha Patrick, and Connor Rasso. In addition, I would like to express my gratitude to my fellow board members and their staff for their contributions to this project. I would also like to recognize the support provided by staff from the Division of Registration and Inspections, the Division of Enforcement and Investigations, and the Office of Communications and Engagement. Finally, I would like to thank the Securities and Exchange Commission staff, including the staff of the SEC's Office of the Chief Accountant, for their support and assistance. I will now turn to my fellow board members for any statements they may wish to make or questions they would like to pose to the staff. Board Member Disparti, the floor is yours.
Good afternoon, everyone. I support the recommendation before us today to issue our new confirmation standard. As you've heard, evidence obtained by the auditor from a knowledgeable third-party source outside the company generally is more reliable than evidence obtained only from internal company sources. And because of that, confirmations have long been used on nearly every audit. A well-designed and well-executed confirmation process can be an effective and efficient way to validate various financial statement assertions, such as existence, completeness, or obligations. Confirmations can also be useful in validating terms of complex or significant unusual transactions, identifying related parties, and addressing the risk of misstatement from fraud. The new standard strengthens and modernizes requirements for the confirmation process, which will improve the relevance and reliability of audit evidence obtained through confirmations, and thereby improve audit quality for the protection of investors. Of note, as you've heard, the new standard reflects changes in technology, communications, and business practices since the existing standard was initially issued, as Chair Williams highlighted, over 30 years ago, including the now widespread use of electronic communications and the involvement of third-party intermediaries in the confirmation process. The new standard is also principles-based, which I think is important to stay relevant as approaches for confirming or otherwise directly accessing information maintained by knowledgeable external sources evolve. One noteworthy enhancement compared to the 2022 proposal is that the new standard now better recognizes that in certain situations, the confirmation of cash and accounts receivable may not always provide sufficiently relevant and reliable audit evidence, or for accounts receivable may not always be feasible. In these circumstances, the new standard provides the auditor the ability to otherwise obtain audit evidence by directly accessing information maintained by a knowledgeable external source, or in certain circumstances to perform alternative testing procedures. Thank you to everyone that provided us comments on the 2022 proposal. As Chair Williams noted, your input has been invaluable in finalizing the project. In that regard, I will mention that we received many comment letters expressing concern that certain language in the 2022 proposal seemed to call into question the integrity and competency of internal auditors. That was certainly not intended. And under our standards, internal auditors can and do play an important role in providing direct assistance across many areas of the audit. The Confirmations Project has been on our standard setting agenda for many years, and I commend the staff currently involved for bringing the project to completion. In particular, I want to recognize and thank Barb Vantage, Dima Andrienko, Lisa Busidu, David Hardison, Heather Josem, and Danny Verbeck in the Office of the Chief Auditor, Martin Schmalz, Mike Gerbit, Tian Lang, Tasneem Ryan, and John Cook in the Office of Economic and Risk Analysis, and Annie Yen, Keisha Patrick, and Connor Rosso in the Office of General Counsel. I also thank for their collaboration and idea sharing Chair Williams and my other fellow board members and their staffs, Brent Seimer, Katie Driscoll, and Lucia Caramba for my team, and the SEC's Office of the Chief Accountant. On an unrelated matter, before I turn the floor back to Chair Williams, I want to take an opportunity regarding the SEC's announcement yesterday to congratulate my colleague, George Bodick, on being appointed to the PCAOB board when my second term ends on October 24th. I've worked closely with George over my tenure, and I know he will bring tremendous expertise and insight to the board. Congratulations, George. With that, I'll turn it back to you, Chair Williams.
Thank you, Board Member Disparti, and thank you for your service to the PCAOB. Board Member Ho, the floor is yours.
Thank you, Chair Williams. Good afternoon, everyone. Today's adoption of the auditor's use of confirmation and other amendments to PCAOB standards is an important milestone in enhancing investor protection. PCAOB previously considered updating the confirmation standard with the concept release in 2009 and the respective proposal in 2010. In fact, the PCAOB Standing Advisory Group began deliberating on the need to revise the confirmation standard in September 2004. That means every board in the history of PCAOB has contemplated the standard to some extent. I therefore have mixed feelings about my vote today. On the one hand, I feel privileged to vote on the adoption of this standard, which represents the cumulative wisdom of all the previous board staff and commenters in the past 20 years. On the other hand, I can't help but think that this is not the right way to revise standards. As someone with deep standard setting expertise from my many years at the U.S. Department of the Treasury, I consider standard setting a scientific process that requires thoughtful deliberation as well as expertise, where timeliness is crucial. In fact, when it comes to investor protection, I believe being timely and relevant is more important than getting the standard perfect. That said, this is a moment to celebrate. This standard strengthens audit evidence requirements for cash equivalents, and accounts receivable. In these changing times, one unchanging truth is the prevalence of fraud. In fact, fraudsters are quick in exploiting the vulnerabilities created by the complexity of our capital market ecosystem and the sluggishness of bureaucracies. Fraudsters today are creative, agile, and technologically savvy. To protect investors, we need to be better and faster than them. As a result, although the adoption of this standard is an important step forward, I expect that we will soon need to update this standard and other associated standards to adapt to the rapid changes in technology. We owe it to investors not to wait another 20 years. In conclusion, I support the adoption of the auditor's use of confirmation and other amendments to PCAOB standards. I want to thank the staff from the Office of the Chief Auditor, with a special thank you to Lisa Busidu and Dima Andrienko for their leadership, proactive collaboration, and responsiveness. The Office of Economic and Risk Analysis, the Office of General Counsel, and all others that contributed to this standard. In case this is our last open meeting before October 24th, I want to take this opportunity to publicly thank my friend and colleague, Board Member Disparte, for his service on the board. I've had the privilege to work with Dwayne for the past 2 years, initially in his capacity as acting chair, and then as a fellow board member. Professionally, I value his deep expertise and unwavering commitment to the PCAOB's mission. Personally, I admire his kindness, poise, and leadership strength. His contributions to the PCAOB and our mission of investor protection is unquestionable and will endure, especially when he guided this organization through some of the tumultuous times in 2021. Dwayne, I will miss you, and I wish you well in your future endeavors. Thank you. Back to you, Chair Williams.
Thank you. Board Member Stein, the floor is yours.
Thank you, Chair Williams. I'm just going to start out by joining Christina's shout out to Dwayne. I also joined about 2 years ago and thoroughly have enjoyed learning from Dwayne, both in the international and the domestic context. I've been very appreciative of the wisdom that he brings every day to his job as a PCAOB board member. So Dwayne, we're going to miss you, but we wish you well going forward. So now I'll turn to my statement on confirmations. A confirmation is an essential process used to obtain audit evidence from third parties. And today, the board is considering a staff recommendation to adopt an entirely new auditing standard governing the use of confirmation. And in doing so, the new standard before us refocuses the auditor on the reason for and the importance of the overall objective, which is to obtain relevant and reliable audit evidence. So confirmation has been an important standard from the beginning. But over time, many believe it's become cumbersome, onerous, resource intensive, and paper heavy. Since the first auditing standard, there have been periodic revisions to the confirmation process, and largely they were focused on the flow of paper from auditor to confirming party and back again. As Chair Williams mentioned, facsimile machines, which very few people are using now, were an important part of that process. Audit teams would typically delegate control over this process to the least experienced members on the team. More experienced members of audit teams held a dim view of the effectiveness and the efficiency of confirmations. So these factors, along with the existing standards prioritization of auditors' discretion, many believe have led to check the box exercise, where the audit objectives seem to be satisfied by the weight of the stack of paper rather than the quality. So for some time, staff in the Office of the Chief Auditor have been considering how to modernize the existing confirmation standards requirements while preserving the benefits of a process that has been in existence for nearly a century. Today's new standard introduces new requirements to address weaknesses observed through the PCAOB's inspection and oversight program while minimizing potential negative effects. The staff has developed a standard that emphasizes the conceptual underpinnings of the procedure to obtain relevant and reliable audit evidence to challenge what management has presented. So much has changed since the standard was last revised 30 years ago, but one core principle remains. Audit evidence from sources external of company management can be invaluable. And importantly, it can stop corporate fraud in its tracks. The persistent failure to detect corporate fraud continues to trouble investors, audit committees, auditors, regulators, policymakers, and the public. And yet, many long-running corporate frauds would have been cut short if only the auditors confirm that company's bank account really held the cash that management said it did. So despite a steady flow of new technologies and innovations, the rate of detection of corporate fraud remains stubbornly unchanged. This is against a backdrop where the schemes and the methods of committing fraud remain relatively consistent and costly. One academic study estimated that corporate fraud destroys over $800 billion in equity value each year, and it's only detected in 1 out of 3 cases. Last year, the Association of Certified Fraud Examiners estimated that $4.7 trillion is lost every year due to fraud across the globe. The report also noted that although financial statement fraud schemes are not the most common, they are the most costly. In a survey, 82% of respondents named the independent audit as the #1 anti-fraud control measure. And yet many corporate frauds are spotted by accident. More are actually spotted by accident than by auditors. So without question, the problem of corporate fraud is multifaceted. But when confronted with the responsibility to fight against corporate fraud, too often hands are thrown up with disclaimers of it's just too hard to find. We all have a part to play in the fight against corporate fraud. Today, the board is taking an important step in the fight against corporate fraud by prioritizing and, in certain instances, requiring the auditor to verify information with unbiased sources who are not affiliated with management. I'm pleased to see that today's recommendation is founded on a principles-based framework that can accommodate the dynamic changes in our markets, technological evolution, and the related effects on business practices. Moreover, not only does it accommodate technological changes, but it also invites innovation from audit firms and others. So first, let me talk about the architecture of the rule. The architecture of the framework relies on a sole objective: to obtain relevant and reliable audit evidence directly from knowledgeable external sources. The new standard makes clear that when an auditor deploys the confirmation process as an audit procedure, it is a tool to obtain relevant and reliable audit evidence directly from knowledgeable external sources. By refocusing the objective, the staff have appropriately shifted the emphasis away from the process of confirmation and back to the principle behind the process. This shift in the objective of the standard should redirect auditors away from a type of myopia that has plagued auditors' execution of the existing standard. In doing so, the staff has departed from the approach of other audit standard setters who also focused on the confirmation process rather than the principle of gathering high-quality evidence. Overall, the standard before us today appropriately recasts the overall objective so that it is better aligned with our mission to protect investors. So let me highlight a few of the most important provisions of the new standard. Generally, the reliability of evidence obtained by the auditor directly from a knowledgeable source that's independent of the management of the company should be higher than the evidence obtained from internal company sources. The standard makes clear the auditor's responsibility to determine that the source is knowledgeable about the information sought by the auditor and is independent of management or external to the company. The new standard captures this concept in the definition of a knowledgeable external source, which is usually a third party who the auditor determines has knowledge of the information that may be used as audit evidence. Further, the auditor must consider any factors that would affect the veracity of the information to be sought by the auditor, such as any incentives or relationships with management that could result in inaccurate or misleading information. Once the auditor selects a knowledgeable external source, the auditor may use the confirmation process to obtain audit evidence or may directly access information maintained by a knowledgeable external source to obtain audit evidence. The board's goal is for the auditor to obtain the highest quality of evidence possible, and that may be by directly accessing it at the source. Another key feature of the new standard is the unambiguous presumption that the auditor will look outside of the company when auditing cash and accounts receivable. False revenue schemes often require corresponding or offsetting manipulations to other accounts, typically accounts receivable. Additional manipulation of the accounts receivable account would be required to reduce the balance in the absence of cash receipts. Barry Mickno explained in a prison interview after his conviction for the ZZZ Best fraud this important concept, quote, "Accounts receivable are a wonderful thing for a fraudster like me. They immediately increase profits, but they also do something else. They explain why my company doesn't have any cash. It's all tied up in accounts receivable." End of quote. Simply put, the new standard could very well lead to an increase in the detection of fraud by increasing the quality and reliability of the evidence that an auditor needs to obtain for accounts receivable and cash. Notably, the new standard sets a floor for the auditor in responding to a risk of material misstatement related to cash or accounts receivable, but not a ceiling. Recognizing the vital importance of an auditor's professional skepticism and professional judgment, the standard requires the auditor to consider seeking information from a knowledgeable external source as an appropriate response to a significant risk of material misstatement related to significant or complex transactions or fraud. Moreover, the new standard uniquely empowers the auditor with the flexibility to, 1, apply new methods to obtain audit evidence directly from a knowledgeable external source, and 2, to respond by obtaining evidence from external sources without limitation to any assessed risk related to any accounts, balances, transactions, or other items related to one or more financial statement assertions. The new standard also addresses some of the practical limitations on confirmation use. Some counterparties, as a matter of policy, will not respond to an auditor's confirmation request. In addition, there are times when any response to a confirmation would be suspicious, or the reliability of a response would be in question, such as those where company management exerts undue influence over the confirming party, or other times when the confirming party should not be trusted. Accordingly, the standard emphasizes the vital importance of an auditor's skepticism and professional judgment in light of the facts and circumstances. When the auditor determines that obtaining audit evidence from a knowledgeable external source is not feasible, the auditor discusses the matter with the audit committee and obtains audit evidence from company sources. The auditor's determination that it is not feasible to obtain external audit evidence has implications in the audit, such as potential elevation of the risk of fraud and in the accumulation of sufficient audit evidence. the amount of audit evidence would need to be greater than when obtaining audit evidence from external sources. Finally, as I mentioned, the new standard also improves communications between the auditor and the audit committee, particularly when the auditor departs from the presumed confirmation of cash or accounts receivable. If the auditor does not perform confirmation procedures in response to a significant risk of material misstatement for cash or accounts receivable, the auditor must discuss the matter with the audit committee. In such cases, the auditor should also discuss the matter in the auditor's report. Other PCAOB standards require auditors to communicate critical audit matters, or CAMs, which involve especially challenging, subjective, or complex auditor judgment. For example, the auditor's determination that obtaining external evidence was not feasible and the necessity of performing alternative audit procedures would seemingly present such challenging, subjective, or complex auditor judgments. In closing, I would like to express my thanks to the team for today's recommendation and the new audit standard. The collective expertise, insightful perspectives, meticulous attention to detail, and rigorous evaluation of options by Dima, Lisa, David, Heather, and Danny from the Office of the Chief Auditor have been utterly remarkable. Additionally, I would like to thank our PCAOB colleagues from other offices for their significant contributions. In particular, Mike Gerbet, Tian Liang, Tasneem Rehan, John Cook, and in the Office of Economic and Risk Analysis, Connor Rosso, Annie Yan, and Keisha Patrick in the Office of General Counsel. I wish to commend each of you for the forward-looking, principle-based framework and approach incorporated in the new standard. The approach provides auditors with a framework that emphasizes obtaining audit evidence from knowledgeable external sources and offers at least 2 methods to do so. I believe this standard should result in better audits that will help investors and the capital markets. The design of the standard and its flexibility, from an auditor's exercise of skepticism and professional judgment, invites technological progress and innovation in audit techniques to further the objective of the auditor seeking and obtaining audit evidence outside of the company. That's not just good for auditors, that's good for investors. I also believe that this will move the needle in our collective fight against corporate fraud. The fight against corporate fraud and corruption requires auditors to step up and assume more responsibility. Auditors now will have a clear obligation to seek audit evidence from knowledgeable external sources when auditing cash and accounts receivable. And if not, audit committees and investors will know. Thank you.
Thank you. Board Member Thompson, the floor is yours.
Thank you, Chair Williams, and good afternoon to everyone. The adoption of this standard advances the board's strategic goal to modernize our standards. The promulgation of a confirmation standard preceded the PCAOB. The board adopted the AICPA confirmation standard as an interim standard in 2003. At various times in our history, the board has grappled with this standard. In 2009, the board issued a concept release. In 2010, the board issued a proposal. And in 2022, the board issued a re-proposal. With each step, the board has evaluated, considered, and reconsidered stakeholder input. The version of the standard that we adopt today has benefited from the feedback the board received via the comment process, and I appreciate those comments. I support adoption of the new AS 2310. The new requirements strike the right balance. They reinforce the importance of confirmation as an audit procedure that touches nearly every audit, and they reflect modern-day methods of confirmation. The original standard was promulgated at a time when confirmations were typically conveyed in paper form, via mail, for example. Given the proliferation of the use of technology in the confirmation process including to confirm balances in transactions. Our confirmation standard should also evolve to contemplate current audit practices. In performing an audit, the evidence obtained provides the basis for verifying management's assertions. Audit evidence is of no value if it is not reliable. As such, auditors have long followed the premise that external audit evidence or evidence obtained from a knowledgeable source that is independent of the company is more reliable. It is less susceptible to management's bias or manipulation. And correctly designed and executed confirmation procedures can provide one of the most reliable external pieces of audit evidence available to auditors, particularly when the auditor maintains control over the confirmation process, which is a requirement retained in the new standard. The new standard underscores the fundamental importance of confirmations as a uniquely reliable source of audit evidence, of course, when appropriately designed and executed. The new standard includes additional guidance for auditors. It provides auditors with the direction in situations where it would not be feasible to obtain information directly from an external source about accounts receivable, such as in some industries where there is a long history of customers not responding to paper-based confirmations. In addition, the new standard provides specific direction for circumstances where the auditor is unable to confirm and includes examples of alternative audit procedures. These principle-based aspects of the new standard reflect that application of confirmation procedures must be flexible to account for a variety of circumstances. Lastly, the new requirements emphasize the importance of audit committee oversight. Significant risks are already required to be communicated to the audit committee through AS 1301, or significant risk associated with either cash or accounts receivable. The new standard requires the auditor to communicate to the audit committee when the auditor did not perform confirmation procedures or otherwise obtain audit evidence by directly accessing information maintained by a knowledgeable external source. In order for audit committees to effectively oversee the audit, they need to be informed of decisions critical to auditing areas of significant risk. The adoption of this confirmation standard is the culmination of tremendous efforts over many years. It is a step in the board's efforts to advance audit quality and furtherance of our investor protection mandate. For their efforts in getting us to the finish line, I would like to thank Barb Vantage, Dima Adrienko, Lisa Bosadou, David Hardison, Heather Jossam, Danny Furbeck in the Office of Chief Auditor, Mark Schmaltz, Mike Gerbett, Tian Lane, Tasneem Rayhan, and John Cook in the Office of Economic and Risk Analysis, Annie Yan, Keisha Patrick, and Connor Rasso in the Office of General Counsel for their valuable input and perspectives. I would also like to thank the Division of Registration and Inspection and the Division of Enforcement. I would like to thank my fellow board members and my staff for their efforts in this process. Finally, I would like to thank the Securities and Exchange Commission, including the staff of the SEC's Office of Chief Accountant, for their support and assistance. And before I get off, I would like to also echo my thanks for Dwayne. I can distinctly remember me getting the first phone call as a new appointed board member before coming on a couple of months later in January 2022, and Dwayne literally showing me the ropes in terms of what I needed to focus on and what was important as a new board member. So my deep appreciation for your work that you've done as a board member over 2 terms with the PCAOB, advocating the PCAOB's mission. And again, thank you for your many, many collaborations with my team. Looking forward. I know we'll have other in-person opportunities, but I'm not sure we'll have another public opportunity. So Dwayne, thank you.
Thank you all. Before I call for the vote, I also want to echo what my fellow board members' gratitude for Board Member Disparti. Dwayne, again, thank you for your service to the PCAOB. We wish you the very best in your next chapter, but that chapter is not starting yet, and we look forward to working with you over the coming weeks. Unless there are any further discussions from the board on the standard before us, I'd like to call for a vote on the staff recommendation. Board Member Disparti.
Aye.
Thank you. Board Member Ho.
Aye.
Thank you. Board Member Stein.
Aye.
Thank you. Board Member Thompson.
Aye.
Thank you. All votes are unanimous. That concludes the PCAOB's open meeting for today. As there is no further business, this meeting is now adjourned. Thank you for your participation. You may now disconnect from the webcast and teleconference.